Okay, good morning, ladies and gentlemen. I wanted to go through this week's trades to explain to quite a few people that have been reaching out in regards to what confirmations I took, what the analysis and review was behind the trades that I took, and effectively what the implementation of my specific developed strategy is to understand why the trades were taken. So I've decided to put together this video, which will be a rundown of the week's trades, showing you my thought process behind them and the reason why certain areas were marked, entries were marked within an area of interest, and how TPs were placed, as well as the logic behind the execution of the trade. I'm hoping it's not going to be too long, but I will try and run through the 4 or 5 trades that I placed and show the justification behind them. So, as I'm sure you're all aware, if you go back onto the YouTube chat, you'll see my analysis for the week that we basically ran through where we are on the higher term time frame and exactly what that meant in terms of what we were expecting to see for the week ahead. So the blue line that I've drawn onto the chart is obviously where the week started. In essence, we had hit supply above, and we were looking for 2 projections. We were either anticipating a move that did something like this as the week opened, so we wanted to come up, test these inefficient wicks, possibly test the supply candle on the daily, and then basically look for a confirmation move to the downside. That was one projection that we were looking at. The other projection that we were looking at was the move to the upside. The other scenario that we were looking at for the week was possibly a retest of the supply. Supply turns to demand, and then effectively it's a swap zone, and we look for bullish movement up top. So that was the 2 projections that we were looking at. Obviously, as the week opened, we'll go back onto the 4 hour. As the week opened, in essence, we were looking for indications in regards to what the Asia range would do, what Asia would bring us in terms of bullish momentum and bias. So what we basically saw when London Open came about, we had seen a consolidation in an area of supply that had basically been created Friday. There was a breakaway from this, and the market was failing to push higher above this level. So we had a wick left, a supply candle left behind. The bullish candle that basically engulfed it had no wick to the upside, and it was tested in Asia, but was unable to be broken. So, in essence, there's an inefficient area above here within this wick that we're looking to target alongside Asia. Highs being taken for the bullish momentum continuation in the week ahead. Now, what this basically meant was we were looking for a spike up as Frankfurt opened and into London. And what this meant was that when this trade was actually taken, we actually saw a quick spike in the Frankfurt open session, and it ran up before London. And when we saw this occur, we wanted to see exactly what had caused it to break above the Asia high range. So normally you'd see this area get liquidated. It takes an inefficient wick in these areas, and then will continue the run to the downside. That didn't happen in London and Frankfurt. So Frankfurt opened, it ran up, and it massively pushed through the Asia high range and liquidity that was lying behind it. So the question was, why has it reached up so high? When we went down onto the lower time frames very quickly, we saw that there was an inefficient wick lying at this point, which also is a supply candle that broke the structure to the downside. And we can see that the range itself has taken 50% of that wick. Pretty much textbook scenario in terms of mitigation of the inefficient price levels. So it came in, tapped in at that area, and we actually entered as soon as this bearish candle started forming, because the mitigation of this wick has occurred within a supply zone. So on the 1 minute, we came in, the market starts to consolidate at this area, tests the 50%, continues to pull, and then literally as the market kind of rallies up and starts to return back past the 50%, we enter our trade. So effectively what's happened is we had equal highs left behind here on the lower time frame. So equal highs. These equal highs within that supply zone were liquidated at this point with this push up through that zone, liquidation of highs, and then the market's now going to run for the downside. So the initial impression was that this is a liquidity grab. We got in on this initial trade, which was actually a 2.5 pip trade to start with. So we set our stops just within our standard range of 2.5 to 5. Because the market had already liquidated, this trade was then entered at this point. And we were actually targeting way down here, which is an area of higher time frame demand further back. So we had lows here, and this is also a higher time frame demand zone, which I will try and show you on the higher time frame. So we basically were targeting this inefficient area down to here, and then it was a demand candle here, which caused a massive push up tail end of last week into the end of the week that basically obviously has volume sitting below it. So we're targeting these areas as this is a clear indication that the market may reverse from this zone. So that was the initial trade that we went in with. On the lower time frame, when the trade started to progress, obviously it was hanging around, and I wasn't too comfortable at this point because I thought, you know what, it's not moving out of the zone quick enough, so let's see what happens. However, the trade was left open, it was left safe. When the market started to basically dip down here, this was confidence that obviously there is some sort of bullish momentum. However, at the same time, it's tapped into a demand candle here as well, which again caused a push in Frankfurt to take Asia highs and then also moved up into liquidity grabs previously. So again, this is a very strong level that we should be watching as well. There's a lot of wicks down here which shows liquidity lying below this. Obviously, it looks as though price has been made efficient at this point, which caused the move to the upside, and price was then not retesting this zone when it broke down in Frankfurt. So this was also a rejection candle that we saw forming on the 1 minute, which was a bit sketchy for me personally, and I thought I'm not too happy with exactly what's happening here with price. We expected this to kind of blow through and continue to go down. So as it moved up, I was then debating on exactly what to do. So I thought I'd hold the trade, see exactly what happens. When it started to trace, I wanted to then see what happens within this supply candle that's formed, that moved this to the downside, got rejection here. Is it going to come back and test this supply and then move to the downside? So we waited for a reaction on that. It came in, it's testing the supply. It's testing the supply, showing some rejection, and then we're getting rejection to the downside. So the market's telling us that it's not comfortable going down right now, and we got consolidation, and then we blow through the supply to the upside. So we're then targeting the next supply, which has an inefficient wick above the bearish candle that engulfed it. So again, inefficient price is sitting up here. We do have inefficiencies up here, but we're looking for the supply to be respected because our entry was at this point. So when the supply now gets tested, we want to see a reversal just above our entry, because that's an inefficient bearish engulfing candle, which may have some liquidity lying above it. So we don't mind wicking up into that area where our stop loss is, but we don't want to get much higher realistically. So we saw this happen, engulfing, consolidation again, and it's blown through the actual entry. When it did this, I was thinking whether I should actually take the trade out at this point just above break even, or hold it into drawdown and see what happens. Now, I then realized that the wick above here had not been fully mitigated. So in essence, there's not 50% mitigation of that area, which moved up to cause a liquidity grab for the equal highs behind. So I thought maybe it's going to draw down into this area, take 50% of that wick to mitigate that position fully, and then come down. So what I did at this point was, because I was confident the market wasn't looking to push up higher than this, because London had opened here, and the volume from London open was not sufficient to break this level, I was confident this level was going to get held. So what I did is I moved this stop, which I very rarely do now, to the top of that wick. to keep it below the 5 pips that is our max stop loss that I'm trading at the moment, between 2.5 and 5 pips. And I thought, let me see where it goes. So I was quite confident in this scenario. And if it was going to start rejecting, I was going to load up, which we can see we did, right? So in essence, we get rejection to the top side. Again, the buyers are fighting. Okay, so we were confident that the market wasn't actually going to move above this point because the push and volume that came in from London wasn't sufficient to break that level. So this level was supposed to have held in estimation. So then what we did, allowed the trade to play out, saw what happened. We've got our area of interest marked again. 50% of this wick needs to be taken. When this area starts to reject, what we've got to understand is the market's already been up to this point. Now, effectively, it's created some area of equal highs here again. So at this point, this is now equal highs. We get liquidation. So we have equal highs formed, drawdown, liquidation within the same candle. This is the entry. So when this basically happened, I loaded up 3 positions here again because I was confident the market was not going to come out above this point now. It's mitigated that position completely. We've had full mitigation of the 50% as well. And I'm at 2.5 pip stops here. So what we then did was this position was left to run, the original position. Obviously, the R has been decreased because we moved our stop loss. And then I had 2 positions that we were running to mid-level equal lows here, and 1 position that's running down to that position that I marked on the higher time frame as a demand. What I did was initially, this position here, I moved up as the market progressed. So as the trade played out, we waited for things to happen. Because of the way it was reacting here, I wasn't comfortable how it was kind of moving in a very stagnated manner. I wanted to see a high volume push right the way down. So when the market got to this point here, at TP, I closed out 3 of these positions. So we took a 1 to 3, a 1 to 7, 1 to 7, 7, 14, 17, and then this position was left open with the SL open as well. So effectively, I've taken 17R. I'm at a risk of losing 1R. I would still be 16R up for the day. So this position is then left on. What I'll now do is kind of play things forward. And in essence, we see that the market consolidates, ranges, comes back up, respects the zone that it's created. It's actually taken supply at this level twice. It's testing this area of highs being held back, held below, and then the market runs away. And at this point here, we hit TP. Okay, so this trade basically ran from execution to TP 4 hours 52 minutes, and in essence that's a 1 to 34 trade stacked, literally in 4 hours, 5 hours, let's say 5 hours. Okay, so trade management has been explained to you on that one. So then let's go back to the 1 hour time frame, and we will play the chart forward and see exactly where we are. Our next trade was taken on the 18th at London Open. So we'll play that forward. Here we can see what the market has done is actually come in, is hit an area of demand on the lower time frame here. So if we go down to this, I'll explain this to you as well. So look at this demand candle setting here. Okay. Our trade for the 18th is lined up here. However, what the market has done, this indecision demand candle here, where demand and orders were introduced into the market before the large volume push that broke interim structure here, and also took a lot of levels previously. So see these levels? They get taken out, they get taken out, this level gets taken out. All from this move out of this demand. Okay? So that demand itself, the orders that went in here are very, very powerful. It's a very powerful level. So in essence, we expected to see a reaction from this regardless. Reaction was seen. The market came up, reacted, consolidated back down to where it was. In Asia, we saw equal highs being formed. And then play the market. Okay. So at this point here, in Asia, we saw a massive drop in the market. and it's unorthodox that I ever see this, but it was quite surprising to see this happen in Asia, because this was the move that I was actually expecting to happen in London. So when this did happen, we wanted to see how Asia recovered. I obviously wasn't up at this time. Didn't really care. But at this time, I kind of got onto the charts, saw what happened in Asia, and I thought, a bit strange. Okay, so let's see. Our area of interest now is actually this move. Okay? And people may ask, why am I not targeting that candle there? Because that candle is already a zone that I'm looking at in line with the Asia high that I trade very, very regularly, the Asia range. Okay, liquidation of Asia highs and Asia lows. Now, that would kind of fall within my area of interest, which I always monitor on a daily basis regardless. However, there's a massive move here in Asia that's formed. And I'm interested to see what caused this move, because it's broken all this consolidated structure, equal lows, everything here has been taken with that one candle on the 5 minute. Okay, so when we go down onto the 1 minute, we can actually see supply that has been induced at that point, which caused this literally fall off the cliff. Okay, so at the moment now, we're in an area of interest that we are targeting for the trade ahead. Now, the area that we're looking at is our Asia range, as well as this area specifically, because this move occurred in the Asia session, mid-session. There's something that's happened here that's going to cause a reaction. So we're going to see if the market reacts out of this zone or it targets the Asia highs. So as the market kind of developed, Frankfurt drops, consolidates, leave behind equal lows, comes up into London now. So what have we got here? Equal lows left behind. Okay, you could say that there's minor liquidation, but equal lows left behind. Still equal lows left behind here, and there's a lot of liquidity lying down here. So what we're looking for is we're looking to see how the market now comes into and reacts out of this supply. So it comes up, we can see a compressive move here, right? As the market develops, this is compression. Up, down, up, down, up, down. There's no high volume move into this zone. We want to see the market approach a zone, and as it starts to approach the zone, it slows down, which shows us that something's about to happen. Okay, so as this occurs, we're now watching the zone. Rejection from just below the zone, showing that there's something holding us up. This occurs, London opens, volume comes into the market, rejection to the upside, and boom. So as soon as London opens, we're in our area of interest, and we've got rejection on the upside. As this trade basically triggered into this zone, instinctively, because it's an area of high volume and a high volume push down here, I've taken the trade because we're at 50% mitigation. Okay, so at this point here, we're very close to 50%, if not at 50%, right? So that's basically entry, bang. So I've entered as soon as this candle's closed, boom, we're in on the downside. So engulfing candle beautifully takes out all of this push to the upside, and then we're looking for reconfirmation. So as this kind of occurs, we're kind of assuming this zone is kind of clear at the moment for us and seeing how the market reacts. So now what it's done, it left behind some equal lows here. Okay, the market then starts to basically continue to the downside, comes, consolidates, is now looking for re-entry. So again, we want to see this area get respected, the candle that kind of wicked into the zone, possibly back up to this level. Same as the first trade that we took, respecting this area of interest. Comes in, wicks up, and here I took the trade because this candle also now has been mitigated 50%. So at this point, 50% of that candle is taken. We're in an area of interest. We're expecting some drawdown, but our drawdown should not go above this wick. Okay, and even if it does, this is a 2.5 pip stop loss. We're up to that point roughly where the market should not basically start testing the top half of our area of interest. So trade was entered at this point. Next candle, boom, same thing again. Engulfing candle to the downside, and it continues to move. Okay, so that's the logic behind this trade. We were then obviously monitoring which levels to take our trade out at. This is something which I held, and I wanted to see how this trade developed. So as the trade develops, once it's kind of got down to here, I'm comfortable that the trade's going to develop and move further, because now it's basically broken out of the consolidation. High volume moves down during London session in the peak time between 7:30 to 10. Okay, this is where we're going to see moves occur. We're now going to hold the trade down to our lows and our inefficient levels down here of demand to basically exit our trade comfortably and calmly. So effectively, this was a 1 to 12, 1 to 12. Okay, and this is where we play this chart. Market consolidates. There's numerous points of re-entry that could have been taken. Held the trades, boom. Trades have hit stop loss, hit TP 1 to 24 on the 18th of Jan. That's how the trade was enters. That was the logic behind it, and this is how the trade was also managed. So again, similar scenario to trade one. We came, watched an area of interest, reacted to that area of interest, confirmed it with mitigations, confirmed it with volumetric moves, retested, got in on the retest, respected the zone, comfortable to hold, and we held both trades to our maximum interim TP, which we were comfortable with as an intraday trade. I'm more than happy to take a 1 to 3, 1 to 5, 1 to 10 trade on a daily basis and call it a day. I don't need to hold the trade to get 1 to 100, 1 to 200, because that really is not my standard. I'll need to monitor that trade continuously to kind of get something out of that. I prefer to do my trades, exit, and then enjoy the rest of the day and come back the following day and get in on the trade. If it's continuing on the downside, pro trend, we should be able to pick up those trades tomorrow. So I can either take one trade on Monday and hold it for the rest of the week and see what happens with it, or I look on a daily basis, take out what I need to pay myself every single day with trades that I win, 1 to 3, 1 to 5, every single day, that pays me. Whatever happens for the rest of the day on the trades that I leave stacked, opening, it doesn't matter to me because I've paid myself for that day. And that is only if you have a trade that can be executed according to your plan. You don't place a trade blindly just for the sake of trying to make some money every single day. You don't need to trade every day. You can pay yourself every single day when the trade is there to be had. And if you pay yourself enough on a day for the week, you can decide to call it a day for the week. That is personal preference and something that you need to develop yourself as time goes on. So trade 2 done. We moved on into day 3, and day 3 was, let's go back to the 1 hour. Okay, day 3's trade was a bearish trade as well. So effectively, let's see what happened here. We are now entering an area of higher time frame demand. So 4-hour demand zone is marked up in this box. 1 hour demand zone is the zone below. So we waited to see what happened. It came in, took 50%, reacted from 50% slightly, and continued to the downside. When it continued to the downside, it's now testing the 1 hour demand that created this move to the upside that broke interim structure. So we want to see how the market reacts out of this area. Now, bearing in mind this happened at the end of New York session, I tend not to trade after 2 or 3 o'clock in the afternoon. At times, I won't even trade New York session, because if I've made what I need to on London, I'll call it a day and enjoy the rest of the day. So this happened in New York. We got a bounce, equal lows formed, and effectively the market started to reverse from this point. So because the demand zone had been mitigated so deeply, I was skeptical as to whether it's going to hold. So what I was now looking for was, where can we target trades for the following day? So we're obviously looking for areas of supply now, right? Let's get rid of this. This is no longer relevant. Is it? It might be relevant for the future. Let's see what happens. There's a reason I left that on there. I forgot to do something with it. So we are now looking for areas of interest for the progressive day. So Asia opens, Asia develops. As Asia develops, at this point here, we are now at 5:30 in the morning. So Frankfurt opens. Okay, Frankfurt opens, and we get a liquidation to the upside, which beautifully falls within our area of interest on a lower time frame supply. Okay, so this is where I was now assuming that demand was going to get broken. We've got massive rejection to the upside. Demand was going to get broken, and I'm looking for it to take this demand. So what I did was, at this point here, let's go to the 1 minute. So market comes in, and we're looking to see exactly what happens. Okay, as trades progress, Asia low gets taken. We come back up. I'm now looking at my point of interest as this supply, top of this area to come in and possibly take, or this supply that's been induced to basically take Asia lows. So lows have been taken. I'm now expecting highs to get taken. When the highs get taken, we will then basically enter our trade. So as it develops, we get into this zone. We see respect of this wick that was formed on the supply, because bear in mind this is regarded as an engulfing candle on the lower time, on a higher time frame. Okay, inefficient wick is left behind here, which has kind of made that price efficient behind it. Okay, it gets respected here, rejection to the downside, comes back, retests, and we're bang in on the trade here. So I took this trade as a stacked trade, 2 positions, 0.5% each, and in essence what we were looking for was a short-term reaction of 10 to 15 pips down to demand, this point or this point, and then one position that we were holding to get through the demand, the higher time frame demand altogether. So what effectively happened here was we had a reaction, took TP at this point. When the market started to slow down and reverse at this point, I cleared my position off, and that was put into the Instagram story as soon as I did that. So I cleared this position. The other one was left break even. So this one effectively was taken off. This position is taken off. This position was then left break even and left to see if it would run to the downside. Okay, so what we then did, allowed the market to play out, came back, took us out, and it continued to the upside. Okay, so this was a 1 to 4 trade that we cleared off at this point. So now what we were looking at is we're going to see how the market reacts to the demand zone, and it comes back in, and now it breaks out demand. Okay, so now we're possibly looking at areas to target for another short, which would possibly be coming out of a counter trend reversal into an area of interest and then rejection again. So here what we did was we were looking for areas, lower time frame areas of interest. So this supply was what I was then targeting, which caused the move to the downside, broke structure on the way, and then continued to the downside. So as the market plays, we came up into that zone. Okay, as soon as we entered this supply here, get rid of this now. As soon as we entered this interim supply here, I took this trade because again we've tapped into supply. I don't know whether this candle is going to hold or this candle is going to hold. So in essence, I took this trade at this point when the supply was tapped, the wick was respected above here. This wick was respected here. We entered the trade, 2.5 pip SL, and we're targeting a short-term reversal. So as the market got to this point, we took off a position. Market starts to reverse. And that was the trade on 1 to 5. Okay, so it's now come back up. We're waiting to see what it now does with regards to this supply. So this is a zone, which I think it's a half-hour zone. Yeah, so that's why it was that large. So effectively, full zone is there, 30-minute supply, which caused a move to the downside. Okay, now we want to see how the market reacts to this zone. And let's go down to lower time frame so you can see how it develops. Okay, so this trade is done. Okay, so too much consolidation now, right? This is what we're getting a lot of compression. What we're seeing now is this zone has been respected, but the market is not moving out of the area that it needs to react from supply. So our initial reaction was good. We got a 1 to 5 trade. Okay, we then wanted it to get retested, and we wanted this to blow through the demand that had been held up by this initial retracement, but it hasn't done that. It's consolidating massively right now. which obviously led me to think that, you know what, this is not a trade to get back in on. Even if the market came back up into an area of interest now again, we wouldn't be taking this trade because it hasn't now broken structure to the downside. It's just consolidating. Okay, so as it consolidates on the higher time frame, we can see that it never really moves away from the zone. Okay, so it comes back in, tests demand here, which moved and broke structure to the upside to get into that supply. This demand has been tested to come back up, but this is in Asia, right? Gets tested in Asia. What we're now looking for is our area of interest. Okay, so what we can see here, we've got equal highs all the way across here. Okay, wicks galore, which shows a lot of positions being held at this point. So this was in the morning when I kind of put up on the chat, the Instagram story, that we were looking for two areas of interest. Okay, Frankfurt opens here. So what we were looking at was an area of interest which would allow us to take Asia highs at this point, and there's a whole heap of liquidity lying above this, okay, all the way across. But we also had our higher time frame area of interest, which caused this move to the downside as well. Okay, so it has broken interim structure here, but it's not a great move. So that's our higher time frame area of interest. We want to see it get respected because this has a lot of wicks above it. Wicks galore here. There's a zone up here which could get targeted, but we will only concentrate on that when this area of interest gets taken. Okay, so this is what the initial entry I was looking was for. Higher time frame entry here, lower time frame entry is here, above the Asia highs. Standard process every single day. It's what I look for. Asia high manipulation. So we'll get rid of this because I think that was on the story anyway. So when the London session was going to open, we saw the market come up and it's compressing now into our area of interest. So here initially Asia highs and then the supply above. Okay, so as it compresses up into that zone, it gets tested. It's testing and it's rejecting. We're waiting for London volume to open. London opens, volume comes into the market, testing Asia highs, liquidates Asia highs, and when it did this, bang, the trigger was pulled. Okay, so what the market's done, it's come in, compressed up into this area, it's moved up into Asia highs, it hasn't then continued the push into the zone above. So because it didn't do that, it's now rejecting to the upside again and again and again and again. 4 weeks, 1, 2, 3, 4, right? There's no volume in London now to push the market higher than this point. So this was proof enough for me to take the trade. Entry was taken. In essence, engulfing candles formed, rejection, rejection, and we are away. Okay, so again, this is what I do to read the market. And if I just play this for you guys, you can see this was the last trade of the day. Again, I have learned from mistakes in the past. I used to basically close trades at break even or set stop losses to break even when the trade moved away from the zone. I no longer do that at all. Okay, I won't mind a trade coming back in, drawing down into that zone again, mitigating the position deeper, even if it needs to. But I'm confident that my stop loss would get respected. So this basically was respected. Market moves away, and literally we're targeting Asia highs to Asia lows, Asia range manipulation. And when this trade kind of played out, bang, done for the day, away, right? However, so this is effectively the ATR week trade execution, management, and analysis for yourselves. We had a 1 to 34 on Monday, a 1 to 24 on Tuesday, a 1 to 4 on Wednesday, a 1 to 5 on Wednesday, a 1 to 15, which we've just seen here on Thursday, and Friday was no trading day. Okay, so I kind of called it a day here at this point. Obviously, if you go into the higher time frame, had this trade been held, okay, it's always good to look at things in hindsight. Look, had this trade been held, right, it would have basically ran another couple of pips, right? Another 10 pips or so. So I was happy that it started to reverse. But then what happened is we need to also understand what happens after we leave the chart. So the market comes in, comes up, London session basically takes the low of Asia, moves up, New York basically comes and takes equal highs, sitting at this point, which is on the 18th, Asia session, liquidates those highs, very, very minor liquidation, takes the inefficiency lying above this bearish engulfing candle, respects this supply zone and the wick above it, equal highs sitting above, liquidates that area and falls away to the south, right? So at this point, we're looking at from here to here, it's moved 116 pips. Thursday, London session, New York session, sorry, Thursday through to the end of the week, 115 pips, which could have been held as a long-term trade. Regardless, it's always nice to see things in hindsight. I didn't trade Friday at all. I was very happy with what I got throughout the week, so I called it a day. I hope this has been beneficial for yourselves. It's a long video, but it is a full breakdown of the entire week. 5 trades in 4 days and ATR for the day, for the week, sorry. So not a bad week at all. No over trading. Everything was taken with a confirmation, with analysis, with execution, and with precision. And risk management was employed in every single trade, which is why it was so sweet to basically get this week. I probably won't do the same next week because I don't want to basically start putting out signals like this. I just wanted to show you what is possible, what is achievable on the markets regularly if you implement a trading plan and you have correct management and execution of your trades, not throughout the day. It's on a minute by minute basis. You need to be able to read and understand and make snap decisions at the cusp of that second when things are changing on you to protect your position, protect your capital, and take your profits. So as with always, please do drop comments, likes, subscriptions, share this video with anybody that you think will be benefiting from it. And any questions that you have, drop them in the comments or send me a DM on Instagram and I'll be more than happy to answer questions and entertain any discussions. Share this with your friends, families, and people in the industry who need to be shown that trading is not a gamble game. It's not 95% of people lose. It's 95% of people haven't been told how to trade the right way. But when you do know what you're doing, you can make it profitable for yourself. Okay? Take care, guys. Stay safe, trade safe, enjoy the rest of the weekend. And I will be putting up a forecast video tomorrow. I just wanted to put this one out there to show you the trades of the week. Take care. Bye-bye.